And Jay Kumar of Prime Securities has joined in now. Jax, good morning. What have you made of this recent rally of 7% in 9 days, and do you see a lot more upside in the near term?
Good morning, Udayan, and New Year greetings, slightly belated to everyone. The way I see this is that I think the excesses of the last year, especially the last quarter of the last calendar, are being reversed pretty aggressively. Everything, including the currency movement, including movement on the index. I think it was a complete capitulation in some sense. At least the portfolios did capitulate of most investors, especially the foreign investors. I think new money, which in some moderate sense was waiting to come in, has started trickling in. But I think the new year has also brought a certain fresh perspective to it, which is that at the end of the day, when all seems lost, as they say, it's darkest before dawn. And it seemed more than dark. It seemed like, there was no tunnel, forget the light at the end of it, in the last 2 weeks of December especially. I think in that context, if you see the current year, there is, nobody knows, really who the buyers are, and yet a number of mid-cap stocks have bounced off 20, 30, in some cases even 40% from the recent lows. The beautiful thing about the whole movement has been that the index has done nothing much. You could say 6-7% is decent, but really speaking, I think it's still probably stuck in a range of 46 to 5,000 or 5,100 max. And in that context, a lot of stocks have done much more. This kind of resilience that the index shows in the context of whatever headwinds that it has had to encounter. The rupee shows some strength despite despite recent dollar strength. The rupee has continued, in fact, has appreciated moderately. From the levels of 54, it is down to a tad below 52. In that context, I think the first signs of bottom formation are now more and more getting established. I think from a sector perspective, there's clear rotation out of the IT, consumption, and the sort of leader spaces, if you will, and movement into especially private sector banks, into the infrastructure space. And I think that rotation is clearly visible. But I think the story is not really an index story. The story lies elsewhere, and the story is really the mid-cap beaten down spaces, where without knowing who the buyer is, if stocks are up 25, 30, 35% and continue to show momentum on the upside, I think we're talking about a pretty sensible call that we can take, that the bottom is around the corner. I mean, even look at recent headwinds like the European downgrade, for instance. I think, what is it that the rating agencies have told us that we don't already know? I mean, just to put it in an analogy, the European downgrade by rating agencies is like Virat Kohli saying that nothing's going right with the Indian team. I mean, who doesn't know this? So, to some extent, I think there is a lot that's getting factored in, and my own contention is that bad news now, which is pretty much a lot of it is in the price, will tend to get ignored faster, and good news will tend to get lapped up. So a few large policy announcements, a few large orders, and the infrastructure space will be up and running. I mean, a simple thing like the L&T chairman, who's been the, in a sense, the biggest critic, if you will, of the government doing nothing over the last 1.5 years, suddenly came out and said things are not as bad as they seem. And that itself has propped up that space. So I think to some extent bad news has been over-factored in, and good news now will begin kicking up stocks much more than people anticipate.
Jax, morning. Do you think the meat of this rally will unfold in the course of the next few weeks and months though, i.e. is there the potential of a pre-budget rally here?
Again, depending on what you consider a rally, I think 95% plus of the market is focused on the Nifty. And the Nifty, in a sense, is trading in a plus minus 5% range, which will not excite most people. But the story, as I said, is elsewhere. Just look at what's happening to the mid-cap infrastructure space. I mean, the likes of the GVKs and the Lancos and the GMRs were giving, sort of bankruptcy pricing indications in the stock market, and those have started bouncing off. There's news about, road orders and power, the power ministry taking steps to make sure that things are available for power generation, etc. Even though these may be small sentiment-based steps, but it's enough to sort of kick up a reasonable amount of action there. And I think the real action is there. Real action is not. These have all been, I mean, many of these companies are quoting at 1/10 to 1/12 what they used to quote at peak times, peak multiples. So from that perspective, these are all, as I said, completely overdone, and maybe the story lies there. Maybe the story is in the heavy engineering spaces, and some of the recent safe havens like IT, etc., are clearly meeting headwinds. They've had their run up and they're sort of tapering off. So it wouldn't surprise me to see this story continue, where public still looks at the Nifty or the index for some kind of a balm to say that there's a bull market on, and they're not getting any clear indications, and yet the meat of the market, which is the mid-cap space, displays strength and momentum, which is belied by the lack of strength in the